Bitcoin has to get out of two traps. One of them is the 60 to 70K range. The other one is the 4-year cycle narrative, which has one final puke baked in. How does Bitcoin get out of that trap? Can it get out of that trap? Well, of course, you might guess that the answer would be yes. I'm going to tell you how in detail. It's got to do with liquidity, AI, and some Raoul analysis combined with some news and some of the great things that Toby Ward from the YouTube member area gave me. So stick around because we're going to be looking at both the Bitcoin and, are you ready for this? Shocker. There's actually something to look at on the Ethereum chart. We're going to go through that. We're going to go through PowerPoint as to how Bitcoin gets out of the 60 to 70K trap. This is the market update. I am your host, Bill Noble. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live. And if the content works for you, hit the like button. Brief shout out to Bull Runner and Zapatis. Always brightens my day to see you guys on the stream right away. And as they say, work does go into this, so please give us some love if possible. Hit that like button. Okay, well, what is the problem? Like, what is happening out there? What is the real pain in the market? What's the pain? Like, what is the problem? The problem is that Bitcoin cannot get out of its own way, right? So if you look at the consolidation prior to the move above 100, so if you look at the consolidation on top of the old high, which was like, 65 something prior to the election parabolic. And then you look at the current consolidation between 60 and 70K, and you add them up, Bitcoin has been between 60 and 70K for over 300 days, according to Glassnode, as quoted by CoinDesk. All right. Now, this is reminiscent of the post-2002 era, where Bitcoin was between 10 and 20 forever. That was like also pre-2000. I'm sorry, 2020-ish. And this 20 to 30 was post-2022 as well. So here we are in mega bear market land, consolidating. And the question is, how do we get out? And how do we get out? And can the market even load a rally to get out? In other words, can this thing go to its 200-day moving average? Can it? And if it did, what would that look like? Now, to state the obvious, and when I mean obvious, I mean painfully obvious, is that the bears have control of the narrative because of this annoying graph. Okay? Really, it's this simple. This is the 4-year cycle, right? Market goes down for a year, it goes up for 3. All right. 2014, 2018, 2022, 2026. Okay, so bear market's almost over. Frequently, these things end with some kind of climactic puke. It's very hard to argue against this. Everybody who said it can't happen anymore. All right, let's go over that. So everyone said, well, this can't happen anymore because we have ETF adoption. No one's going to sell the ETF. It isn't even 1% of everybody's portfolio. And guess what happened when, Michael Saylor came out and got scary levered? Everyone freaked out and sold the Bitcoin ETF. So the thing that was supposed to help us stabilize Saylor and the ETF were flipped and became net negatives. Net negatives, fueling what I would call the give up trade, where everybody had to embrace the 4-year cycle, right? right? Only like a couple people were talking about it, like Army Piper, Crypto Princess, Benjamin Cohen. They were talking about this. They all got super famous for, essentially betting against everyone else. And then we all had to brace it. We all had to put that 4-year cycle hat on. Wing Raven, appreciate the the TikTok trinkets. Thank you. I sincerely appreciate that. 1,000 joules. Feel free to follow his lead. So how do we get out of this? Like, is there a way out of the 4-year cycle trap? Of course, you might guess the answer is yes. Yes. Now, here's one reason why. We talked about this yesterday, and I'm actually shocked as to how much gratification we got on it right away. So the geopolitical conflict is back on again. Looks like we're spending a lot of money blowing up empty buildings. Really. I mean, that's what it looks like. Oh, look at this giant fire. Really? What's burning? And the other side is like, yeah, we attacked your bases. Really? So we left a whole bunch of guys on our bases. We left everybody there a sitting duck. It looks like we're blowing up empty buildings. Some of these buildings are critical infrastructure. I've seen some photos, but this feels pretty boring. So oil didn't go up. Oil did not go up. Oil was up for like an afternoon, hit the 21-day moving average, and came off. Now, why is that relevant? Okay, well, I'm not going to repeat the entire live stream from the other day, but essentially, Warsh cannot create a new Fed model with $80 oil in his face. He can't. He can't say, you know what, we want to focus on something else. We would like to stop inflation. We would like to help the economy grow, the whole data center thing, the whole AI thing. We would like to let that blossom so we can get productivity and get lower rates. Government has to finance itself. He's not stupid. They have massive interest bills. Crude oil went to the 21-day moving average and failed. Simultaneously, Bitcoin tested the 21-day moving average and bounced off of it for the second time or third time. And even with ETH, ETH broke out, very impressive, came back, did a retest, and now it's, trying to move back up. My guess is everyone is now selling because, we do the big escalations over the weekend, and then we make peace 2 hours before stock market futures open. That's been the pattern. I guess that they would continue with this pattern, whatever. Now, the big thing, let's just have a laugh and look at, the 200-day moving average in Bitcoin. Okay, and then we'll go through how it is we ever get there. So this long-term moving average in Bitcoin is at 75K, which is pretty much where this whole decline started from after the last time Bitcoin hit 75K, or I'm sorry, hit 82K. So all the way up, smash lower. What was this about? I can't even remember. Was it Michael Saylor? I guess so. Michael Saylor is going to sell Bitcoin at the beginning of every month and to pay the dividend, and that's going to be like you selling to pay rent. I don't know that results in something serious unless NASDAQ cracks. But the thing that's funny about NASDAQ, just to like throw this in, so oil did not explode. Bitcoin did break out. And ironically, everybody is saying buy Nvidia because Nvidia went down to its 200-day moving average. It broke the 21-day moving average, and now Nvidia is trying to do better. And supposedly, relative to what it earns, Nvidia's stock price is now reasonable. Nvidia used to be like, oh, it's hope and promise. And, they priced perfection, and then they got perfection, supposedly. Right? Accounting shenanigans aside, Nvidia could save Bitcoin. Like if Nvidia could actually start leading equities again, or if the little, purge that they had in semis, especially over in Korea, is over, then perhaps a different or the older component of the AI trade, which in my mind is Nvidia and Bitcoin, can actually start moving together again. Don't laugh. So the AI trade again has to spread out for Bitcoin to move to 75K. Now, in order to even entertain this notion of a much bigger move up in Bitcoin, you do have to wade into the crocodile pool of this time is different, which is a saying that, as one person I know used to say, it has a body count, right? It's the 5 most dangerous words in the English language, right? This time is different. The only way you get away with this time is different is to say that this AI boom, the spending that's related to it, the spending of the federal government, their deficits, and the printing that's going to need to occur. And don't forget the little stealth item that no one talks about, which is what's going on in Japan, which overnight has a positive catalyst. So believe it or not, the Japanese aren't going to sit around and watch everything go to zero. We knew this, right? So overnight, what happens is interest rates on the Japanese government bond fell. You have a massive divergence here, massive, where you have a new high in price and a lower high in the oscillator. Knowing this, the Japanese come out and say, you know what? We think big pension funds and insurance companies in Japan, which are enormous, should buy more domestic assets. Yeah, we think these guys should buy. So everybody covered their shorts. Everybody bought bonds. And when bond prices go up, right, rates go down, right? Prices up, rates down. So everybody buys Japanese bonds overnight. Now, why is that relevant? Well, because the Bank of Japan official wasn't making a suggestion. He's essentially telling the private sector to go out and buy bonds while that is quietly backed by the Bank of Japan in a stealth kind of way. In other words, you buy and we'll make up for any losses if you incur them. Okay, but we want you to do our QE. So overnight, at least they stopped the disaster in Japanese government bonds by showing we will get the bazooka out if we have to. And central banks do this all the time. It's like markets test the central banks, and then the central banks will go, okay, really? Wow, that's what you want to do? We'll break out with the insurance companies and the pension funds, and you can get in their way because they're coming with us behind them. Okay, hence, you have a little breathing room in Japan. You have oil and essentially reacting to what right now is a fake escalation. You have, oh my God, there's a huge moment of revenge coming. It's a gigantic thing. Okay, maybe, but not today. Not today. And the market is actually doing pretty well considering that usually these actual escalations occur over weekends when the market's closed or the stock market is closed. But Bitcoin as a component of the AI trade and even ETH can spring to life. And why would they not spring to life? Well, because of the 4-year cycle and yeah, all that stuff. Let's go to the PowerPoint. All right. So, ETH has got to get back inside this range, right? ETH lost 2K to 2.2K. And if ETH can't get back above this pink line, nothing is real. But there is a bullish buy signal in ETH, and ETH did hold the 21-day moving average. So until proven wrong, ETH is not a drag. From a TA point of view, it's not a drag. So the bears are right in that obviously Bitcoin sentiment's horrible and there is no uptrend. Okay. They're wrong if they think there's no alpha in crypto. That's, I think, completely insane. Okay. Bitcoin as a collateral layer in DeFi, governance for AI agents, things like DEXC, DAOs for machines. AI agents need data, compute, coordination, and execution, right? These agents are going to come online. They're going to need rules. They're going to need layer ones that can execute, like Monad or even Sui. And everyone is acting like these things can't happen, right? So you want to trade the stack, not the slogan and the 4-year cycle. Like, these things are out there. And of course, Bitcoin is a part of this, but because of the 4-year cycle, even my bullish PowerPoint presentation almost can't acknowledge it because sentiment is that bad. Price action is all lower highs and all of this. Like, there's a whole stack of negative Bitcoin charts. I get it. But, there are coins to be looking at. There are sectors to be looking at. Like, so you have data is grass, right? DePIN for normies. Okay. Akash and IO in compute. Tau for models. Agents is OLOS. And execution is DEXC and Zest. That's basically Bitcoin DeFi. So there are sectors to be looking at. And, we said this on the free live stream. We say it in our member area where we pick these coins and build these sectors and build these baskets. Ironically, don't laugh, just like Goldman Sachs. We build baskets for people that they can look at and do research on, or just buy, a little bit in each basket, because one day when the machines get here, this is going to explode. And everybody keeps talking about the spending in AI and the spending on data centers. And Raoul Paul's on the tape going, it's a spending super cycle. We can never stop spending on this AI. You stop spending for 15 months, you'll wind up 3 to 4 years behind, right? It can never stop. Government debt's never going to stop. The interest payments aren't going to stop. The printing won't stop. Yet we're all looking at this, right? First, we said this time is different. Now we're all convinced this time isn't different. And I don't know. I think maybe it just pays to fade everybody. The 4-year cycle guys faded everybody at the top. And now I'm wondering if it's time to fade the 4-year cycle guys, if not on Bitcoin, if in the rest of the market. Okay. So, I mean, these are all the coins that just sort of like, the alpha is in the sectors. Okay. Grass breaks the data bottleneck. If data is the oil of AI, Grass is trying to become the weird crypto pipeline. By the way, Grass traded on Coinbase, not investment advice, but like, who is looking at these AI related coins? I mean, the news is obsessed with like, Meta makes a new chip or Meta releases a new model. Who cares? No one's going to use that stuff. No one's going to use that. They can make it free. That's going to get you off Anthropic, Google, and ChatGPT. Good luck. But they're going to spend anyway. They're going to spend and spend and spend, and they're going to wake up and go, you know what? We spent on the wrong thing. I think this is a very important point. What is everybody spending money on? Well, you're probably spending money on Starbucks and Subway. And if you put that money into Bitcoin 5 years from now or 3 years from now, you'll be much better off. You've heard that before. But everybody in the capital markets is spending on chips and models, and, the spending won't stop. And all that money's not going to come back to investors. But eventually it will create a productivity revolution. It will also create a revolution in transactions, which Bitcoin should be a part of. Bitcoin is a part of. The only thing getting in the way, you ready? You ready what's getting in the way? is horrible crypto sentiment. We're the problem. We are the problem, right? The 4-year cycle addiction, either because our market is some sort of phony baloney thing moved around by whales, or that's just how the Gann rhythm works. And this is a risk management year and a lookout below year. But even if that's true, you still have to be ready because the DCA starts now. It does. Okay, so let's just talk about what has to happen for a positive outcome. So obviously, Bitcoin has to hold 58. I think everybody at this point understands that if there's some kind of new low, you can have a major mess down to 51 or 40. Everyone gets that. It's, you can say it, but it's obvious. All right. Bitcoin has to get back above 68. ETH has to reclaim 2K. And, AI leaders have to essentially break out on volume. No confirmation, no sermon. No sermon. Okay. Constructive baskets, not lottery tickets. Don't marry any coins at all. And then if you go back to the TA in Bitcoin, okay, how does Bitcoin get back to the 200-day moving average? Like, what is the scenario? How does this happen? Like, is there any reason to go back to 75? Now, you're going to say no. You're going to say no. Because even if you've liked the market, you've been forced to hate the market. But I think we should break it down anyway. So, bears are fighting what you would call a liquidity machine. It's just, government deficits and the interest that has to be paid and the money that has to get printed to pay it, no matter what Warsh says. So debt forces liquidity, right? The more they borrow, the more money they suck out of the market, the more the Fed has to put it back in, right? The Fed has to print money for Japan. The Fed has to print money. And then I think the ECB is going to start printing money because Europe is falling apart. The correlation between our stock market and the European stock market is at like an all-time low. Like, it's falling out of bed in Europe. And I think the ECB is going to have to print for real. For real. So I don't know who is going to not print. I don't know if the Fed is going to print the way they used to, but I do know Warsh wants a different model. He wants a different model. Every new Fed guy comes in talking about inflation. Greenspan came in talking about inflation. Stocks crashed 20%, and Greenspan did nothing but cut and print for like 30 years. He thought that way until he was 100 when he passed away. So they can all talk about prices being too high, and then something happens and they have to print. And the thing that has to happen here is this AI data center build out and the interest that has to be paid, period, on government debt. So the bears are fighting debt and liquidity, right? The debt rollover and interest payments require an ongoing Fed push. That is the world Bitcoin lives in. Hyperscalers are moving from cash flow to debt. More debt. More insanity. Right? Everyone's like, oh my God, buying Bitcoin's insane. It's going to 40. What? You want to buy the stocks of these hyperscalers? No, of course you don't. Right? Do you want to buy the AI crypto coins? What's that? Nobody even knows. Tech and crypto are the two assets that historically beat debasement and liquidity. Bears are staring at a chart. Bulls are staring at the funding mechanism. We're spending money. We're spending so much money, and everybody is forgetting about Bitcoin. So macro from Raoul. So you have the labor market's a disaster. You have a falling population and a labor market that just will not grow. It will not grow, right? In other words, If you have a job, you have a job. But the second you don't have a job, you're done. We were having a conversation before the stream about people, who get thrown off the cart from a place like Oracle. It's over. It's done. Like that job that you lost doesn't exist anywhere. It doesn't exist anywhere. It's like you either can't get a job or you can't find a job to even apply to. And if you can find a job to apply for, they're hiring unicorns with 300% of the job criteria. There is no job growth. And the Fed is going to have to admit that, combined with the government debt problem. It's not going anywhere. It's just the quiet part hasn't been said out loud yet. Okay. Debt fills the gap, right? So if we need growth and it's not labor, or we have interest and we have spending, it's just debt. It's just more printing and more debt and more debt. And I don't understand why we want to buy leveraged ninny stocks and not Bitcoin, or not ETH or stable coins or whatever. So the only solution is currency debasement. Currency debasement funds the debt machine, whether it's private sector or public sector, right? Why do you think housing prices are as high as they are? Because everyone's trying to short the currency. How do they short the currency? They buy an asset. They buy a house. They buy Nvidia. How is buying Bitcoin not included in that? Oh, because of the 4-year cycle. Oh, wait a minute. Really? Really? Is that what we're going to like, it's almost like reptile mentality. We may have to deal with it. It may just be a TA thing. Fine. But when the TA thing is over and everybody goes, you know what? Currency debasement funds the debt machine, and Bitcoin benefits from both the debt machine and currency debasement. When people figure this out, Bitcoin is all of crypto is going to the moon. And I wouldn't doubt if certain components can actually take off prior to the annoying Bitcoin cycle being over. And I'm wondering if the Bitcoin cycle, as hinted in this PowerPoint, is a distraction. It's a distraction from what's actually going to happen, possibly at the altcoin level, right? BTC and crypto and NASDAQ absorb the upside, okay? The liquidity engine is not fading, right? The government prints and prints and prints. The way they print is by issuing short-term debt. I know that doesn't look like printing to you, but this is a good point that Raoul makes, right? If you issue a 30-year bond, it's not like printing. But if you're borrowing for a month, you put a whole bunch of money in the system for a month, and then you get the money back. And then you immediately borrow for another month and you put the money back in again. It's almost like permanent new money in the system. It's a little hard to explain, but short-term borrowing is stealth printing. So, and that's what the government does, because long-term interest rates are too high. So they do all their borrowing short-term. So nobody can stop debt. Okay. Nobody can stop spending on AI. Okay. They cannot stop pushing liquidity, because otherwise all this breaks. And then all of a sudden people go, you know what? I think we should buy Bitcoin. It's not caught in the oil, gold, silver trap. Silver and gold have not yet reacted. They react more to fear, and then Bitcoin reacts to liquidity. And everybody talks about this. It's the big word on Instagram. The simple fact of the matter is, the reason Bitcoin is not at 40K is because all of this printing and because of Bitcoin's sort of place in the AI trade. Okay. So how can the bulls prove it? Right. 58 to 64K, they have to hold that level. They can puke down there, but any puke down there has to be reclaimed quickly. 68K is important, right? If bears got too arrogant, or if they got greedy, there has to be a squeeze. There has to be a reclaim. 68 seems to be the level. I think the humiliation level for the bears, because, bulls have been humiliated, and we know about that. You humiliate the bears if you can take out the 200-day moving average. I think you can humiliate the bears if you can even attack it. I don't think the market can go down unless you pull everybody in first. It's just my opinion, right? But you could really press the bears if Bitcoin can get back to the 200-day moving average. And I don't see with this picture why Bitcoin would not be able to get back to the 200-day moving average. It's just a long-term mean. It's not like I'm saying, oh my God, it's going to the moon. We have a little bit of moon in our recent GAN roadmap, which is in the YouTube member area. But, you know, and of course, you got to break 80K to get it going, right? You know, if Bitcoin can hold, risk appetite might come back. ETH has to go above 2K, and you need some support from an altcoin sector. Okay. The 4-year cycle is the old map. It's probably going to work because you can't argue against it. However, Warsh wants rates down. The Orange Man wants rates down. Borrowing will not stop. And if oil doesn't go up, Warsh can come in and be dovish, or the Fed can just do this like stealth printing that they've been doing. They can do it under the guise of helping the Japanese, whatever. You don't care. People in crypto don't care. They just care if a number go up, and more importantly, they just care number doesn't go down. Number doesn't go down. Number goes down if, you know, the 4-year cycle and NASDAQ, you know, if you have a problem in NASDAQ, the 4-year cycle guys are going to eat everyone's lunch. Everyone's lunch. Now, if you'd like to see something fun and happy and positive, it's absolutely shocking how no one is paying attention to privacy anymore. Shocking, right? Like Zcash is in the middle of this diamond, and I really like, you know, this Lux Algo thing is great because Lux Algo drew the top trend line for me. I didn't have to guess. So that's the top trend line of the diamond right there. And these things are enormous. Like this diamond is huge. It's a $400 range. It's a $400 range in a $500 coin. That's insane. That's crazy. This is huge. You know, so if you got a breakout in Zcash, and I know there's a whole bunch of resistance here, and I know the day traders want to get out at 63, and I know all these things. And so do you. So do you. But you do have to have a plan. You have to have a plan if it goes down, but you also have to have a plan if it breaks out. You know, that's what you do when it's boring. You make scenarios, you make plans. This could get very interesting. And I know this is a laugher. I know it's a boomer coin. I know it probably doesn't matter, but it did vaporize, right? It went from this Bitcoin Cash. It went from 463 to 200. Now it broke the 21-day moving average. It held a Lux Algo support zone, and it's trying to rotate up. So we're expecting the weekend apocalypse. We were expecting the oil apocalypse 2 days ago. What happens if you don't get the weekend apocalypse? What happens if you don't get it? I think this can go up. I mean, people are bored. People are absolutely bored with the disaster stories. It's just, we're bored. It's like, you know, everyone was like, Michael Saylor is going to blow up. Okay. I did a bunch of Michael Saylor content. I wish he had just ended it. Whatever. You've heard me say it. But guess what? Guess what? Metaplanet wants to go do it now. They want to do it. Now, that's because their currency is collapsing, so it makes a lot more sense to borrow yen, get out of yen, and into Bitcoin. There's no question about that. So they want to do it now. you know, and they, I think it sounds like, I don't know if it's Bitcoin backed credit. I don't know if that's a nice way of saying doing exactly what Michael Saylor was doing. I think it is, but it would be smart if they paid some of the interest in Bitcoin itself. If you really wanted to be smart, that's what Bobby Kennedy wanted to do, right? He wanted to have like an actual physical Bitcoin backing on every debt instrument. Whereas, you know, STRC is just a straight up Michael Saylor IOU. It would be much better if it actually paid in Bitcoin. Another headline getting absolutely no play. Circle can actually make a crypto bank now. Let me ask you something. How long do you think it's going to take? How long do you think it's going to take for somebody to start building the Goldman Sachs of crypto? Like the guys at Stormrake could be the sales guys. The trading arm could be Coinbase. It could be Robinhood. Galaxy Digital is the most underrated, overlooked stock possibly in the entire market. In the entire market. They have data center. They have a crypto hedge fund. They practically are the Goldman Sachs of crypto. And you know what? The market has punished them for that. They have not been able to participate in the data center party, even though they have a giant data center exposure. And the market doesn't believe it. And now we're switching from cup. I mean, Novogratz is bald and he must be pulling whatever hair he has out, because now we're doing not just cup, but we're doing the handle, which can be the most choppy, awful part of the whole thing. It's incredible. I mean, when this finally goes up, it's going to be absolutely epic. Where is the Goldman Sachs of crypto? Well, they're building it. It's just not a story. It's not a story in the mind of the market right now. And somebody's talking in the chat about just, you know, the counter to the 4-year cycle nightmare is mindless DCA. So if you want to give you a mindless 4-year cycle, I'll give you mindless DCA. And if you want to take it down, great, take it down. How are they going to take it down without a NASDAQ debacle? I don't know. I mean, they've completely wasted the hyperscalers. And even though they've wasted the hyperscalers, they can't stop spending. Nobody can stop spending. Now, Raoul goes into this whole argument about this, but here's why they can't stop. Here's Elon saying, you know what? I blew these guys from Anthropic off, and right now they got the best stuff out there. They got the best stuff out there. I mean, they almost own this whole coding aspect of AI. You know, I think ChatGPT owns the imagination part of AI still. Google deep research, but it's pretty clear that if you didn't take Anthropic seriously, you're playing catch up. Everyone's playing catch up to Anthropic. How are they going to stop? How does this AI freight train stop? And when does everyone figure out that, you know, if Anthropic has models that can break institutional cybersecurity, why doesn't anybody think there are going to be agents acting in crypto, in stable coins, and in cryptocurrency? Why doesn't everybody think that? I mean, look, I know what the next video I got to make is. So we do this free live stream. And as a part of the free live stream, we have this very complex PowerPoint about Monad, about, you know, execution, about the granular level ways trades get executed on DEXs and how agents can come in. And, you know, they're going to need fast execution with very little slippage, but they can also use all this execution data as learning data, as training data. So the more transactions occur, the more they learn. So doesn't that sound like a recipe for a monster rally in certain layer ones that the agents use? Yeah. mean, once a DAO comes in and gives the agents some level of rules, they can just go crazy. And if you don't own it before they come in, you're going to miss it. You're going to miss a 5X. I mean, DEXC 5X'd. We talked about it in April. Okay. So, I mean, obviously it's a bear market and every coin that we talk about is not a winner. I get it. But if you find something that actually works, it's 5Xing in a bear market. Like Backpack went up 800%. Okay. DEXE. Now, it's related to trading. It's trading at $35, up 1,000% year to date. We found it in April. These things are out there. Next gen governance. So governance, which was a joke, right? Everything that came out in 2020, Uniswap, Sushi, all this laughable stuff. All these tokens were nothing more than governance tokens. They were like meme coins in effect, DeFi meme coins, all the way up, all the way down. Okay. Now you're going to really need governance. Governance tokens may matter because agents are going to need rules. They're going to want rules. And be like, okay, we're here. What do we do? Okay, let's make these rules go. Computers are going to want direction, data. They're going to want programming. So in this market now, you have stuff that's going up 1,000%, 500%. It's not just Hyperliquid. Hyperliquid is spawning all these, decentralized data alternatives, decentralized trading alternatives. Everyone is acting like AI is like brick and mortar. It's almost like we just build stuff and that's AI. And Elon is reminding you by talking about Anthropic, reminding you that, there's a thing out there that's going to get loose. There's a billion things that are going to get loose. They're going to open wallets and go. I think this is why Bitcoin didn't fall apart off the Saylor news. The Saylor news, when it first came out, it looked like FTX part 2. People still can't stop consuming the research. I still see Michael Saylor thumbnails and everywhere. I put Michael Saylor on a thumbnail. I could put like, hey, let's bake a cake with Bill and Toby as the title with Michael Saylor and the cake. And people will click on it because it's Michael Saylor, because, he's high profile and they love the disaster stuff. Okay. It's like Smashitosi says, everyone seems to have blown it. Novogratz, Tom Lee, Banana Boy, Raoul Paul, Saylor. Everyone came for the future is practically gone. Only number go up. People remain. I'm exhausted. See, I love this guy, right? I love that because that is raw honesty. And for everyone who thinks bear markets are great so they can buy, I heard that one day when I worked at an old company. You're crazy. This is what bear markets do to you. That's why it's a bear, right? It's not a, I don't know. It's not a parakeet market, or it's not a monkey market. It's a bear. You have an encounter with a bear. It turns out very badly. I really should pick up the Leonardo DiCaprio movie so I can show you what you look like if you wind up having an encounter with a bear. You are so discouraged. You are so destroyed. You are so done. So done. Can you imagine? Can you imagine what happens to this market if they break 58K? Oh my God. People will sell. They will lose their mind. They will never come back. You will have more revulsion than you have right now. And I don't know. Call me crazy. I understand P&L and numbers, but sometimes this feels worse. 300 days between 60 and 70. You had the pre-election nightmare where Benjamin Cohen was saying all coins are never going up again in our lifetime. You're going to have a 2018 level collapse. He was saying that the day before the election. Then the whole thing took off. Then we went right back down and had another 150 days of this. But just from a common sense point of view, the market, Bitcoin is still below the 2021 high. And of course, ETH is back where it was in 2017. Like, ETH, the assumption in ETH, it has absolutely no value proposition whatsoever. It is a doorstop. It's not even Ethereum. It's not Bitcoin. That's all Ethereum is right now. I get the sneaking suspicion that could be over exaggerated. And I'm very happy that Solana, if you want to see something happy, I mean, you better soak it up while you can before they do the weekend escalation. Is, Solana hit the resistance. I'm like, oh no, here we go again. Right. But it's holding the 21-day moving average. So Solana's pinned, this is resistance, obviously. It's holding support, right? Like Bitcoin, Ethereum, and Solana are all above their 21-day moving average. Period. Okay. So why is everyone so upset? I mean, even semiconductor junk is back, and it's not junk. And chips are back. Nvidia is back. Kospi did a 20% correction, and now it's up 5%. Okay. They did their corrective puke. Everybody is all negative. Why? Why is everyone negative? Oh, because the graph says we should be negative. Okay. I'm a technical analyst. Fine. Okay. But the thing is, if that chart is your only focus, you're missing the 21-day moving average. You're missing the printing story. You're missing the Japan story. You're missing the fact that oil failed. I got to tell you something. I got to tell you something shocking. When oil was at 60, this Middle East thing, it was obvious it was going to 120. Now they do this huge escalation. And if they do this whole thing over the weekend and oil doesn't open up higher on Sunday, oil could go to 60 or 40. I know a lot of guys think it should go to 200. I know a lot of guys think it's manipulated. That's fine. We'll see. We'll see. But I mean, if oil can't go up, what's the excuse again for a hawkish Fed? You have a war in the Middle East and oil is at 70. Where would oil be if there was no conflict in the Middle East? At 40. Because economic growth in China has fallen out of bed. Russian crude oil is trading at 40. I mean, the Russians have got their energy facilities being attacked. They're importing fuel, and oil just continues to either sit still or go lower. This inflation thing is real because of the delay from the Strait of Hormuz. I get it. But is it really as bad as it was when Jay Powell was sitting around at 0% interest rates with QE while the prices of everything at Costco were going up in 40% increments? Is it that? Or is that whole model being repudiated? One of the guys that we follow on economics this morning is that, Powell, I'm glad Powell stayed on the Federal Open Market Committee, or FOMC, so he can watch Warsh dismantle every single thing that he used to be a goofball over the last 6 years. I mean, let him sit there and watch Warsh take it apart. Let Warsh take it apart. Because I think the Fed's going to have to come up with a new way of looking at the world because of this AI boom, period. And Bitcoin, as the only scarce asset out there, that's why it's not at 40. And if Bitcoin does go to 40, well, that's going to have to be one epic thing. I mean, seriously, like imagine what creates that. A Saylor liquidation, some kind of, giant mushroom cloud. Like what? Like what have they got to throw at us at this point? And it's so funny that everybody thinks Saylor is going to blow up and Metaplanet is going to go do what he's doing because their currency is a disaster. And you know what? They're going to do it. And the capital markets over there are going to eat it up. They're like, get us out of this currency. Everybody is like, get us out of fiat. Why do you think the average home price in the United States is some ridiculous number like 440,000? Like, you have to have two people making 150K a year to be able to afford anything above the average price with a mortgage interest rate, with a mortgage rate where it is right now. Like, again, the demand for housing, where's it coming from? Silicon Valley jobs vaporizing. Like, how does that even resolve itself? Well, the reason housing is where it is in terms of price is because they want out of the currency. They want out of the currency. And if everyone wants to be out of the currency, how is Bitcoin going to 40K in that environment? Like John Legend says, it's a new era. It is, with the AI trade, it is, but the get out of the currency narrative is as old as the hill. You've needed to get out of the currency in the United States, really, I think, since 2001, right? Since that geopolitical event, they were determined to print indiscriminately. And they just accelerated it in 2009 when you definitely needed to get out of the currency. Get out of the currency. I could say buy Bitcoin and you'll tune me out. But if I say get out of the currency, you'd be like, whoa, wait a minute. How do I get out of the currency? I don't know. You could buy a house. Can't afford a house. Okay. You could buy a car. Well, the car depreciates. It's a hard asset, but it depreciates. How do I get out of the currency? Okay, ladies and gentlemen, let's welcome who's here. So we have our classic regulars who are gracious to put up with these varying stream times. We appreciate that. We have Grandpa Keeter giving some love to the Spartan Army from Patreon. New research and new TA are coming. Daniel, patience will pay off. October and November will be the start. Richard Barry in the house. Ricky Ricardo Films, welcome. Gary, a member. Yav, a member. Crux of Crypto, all is well, sir. We appreciate you. John Legend says, Princess puts up some clinics. She's like a chart scientist. Listen. Toby Ward and Crypto Princess they have both literally told you everything you needed to know. Toby has got the sector and the micro work in terms of like where you need to be and why. And Princess was going to beat the drum on the 4-year cycle and didn't care if no one liked it. Matter of fact, I think she liked it that no one liked it. Army Piper put that out, went on vacation, and Princess ran with it. It was like practically a clinic. Benjamin Cohen got a lot of the credit. It doesn't matter. The 4-year cycle guys wound up right. They will be right until something changes. I can't wait until October when we can all be one big happy family, right? When the 4-year cycle guy goes, well, the 4-year cycle's over, and you know what? This time really is different. It's going to 400K. It's going so much higher than it did last time because this time is different and the cycle is okay. Won't that be happy? I don't know. That'll be like the Brady Bunch, right? Like 3 kids on one side with dad and 3 kids on one side with mom, and they bring it all together, and it's just one big happy zoo. I mean, this is going up so high and so massively because everyone needs to get out of the currency. What currency? All currencies. Gary, you can now stake XDC on Uphold. John Legend says Chainlink. I know we're not going to need to connect the whole world. The Rothschilds have a fund where they just put out an article pumping blockchain itself. Now, they have a blockchain fund, but they're talking about blockchain development and security tokens accelerating at a rate, and nobody cares. Nobody cares. I mean, if you had seen all this security token activity with Bitcoin at 120, people would be going crazy. No interest. I mean, the 4-year cycle is what it is in terms of technical analysis, price action, and sentiment. But when people turn this around and go, oh, wait a minute, we've been ignoring, they ignored the Bitcoin ETF back in 2022. They're like, whatever. BlackRock's going to get involved. The next thing you know, BlackRock thought they were going to have $50 billion under management over like 5 or 10 years. They had $50 billion under management in the Bitcoin ETF in 2 years, less than that. I mean, what do you think is going to happen when people start coming into that for real? That was the warm-up. Okay. It's like, Wing Raven said their shadow fleet is getting hit also. That's right. He's talking about the Russians, right? Only the strong will survive crypto. Only the strong. CNBC acting like crypto is dead as if there isn't a bull market somewhere. Right. Grandpa Keeter says syrup is up 10% today. Yeah, dude. DeFi. Decentralized finance is got a pulse. Just like it did in 2020. It was like trading was first. It was Uniswap first. Then, check that. First it was Compound and Chainlink. I think Compound and Chainlink went top 5. Then it was Uniswap and Aave, as I recall. Okay. Then it was just like, Uniswap did an airdrop. I don't know. It went to 8 and then it went to 2 on a crash. And then it went to 20. It was unbelievable. Like the DeFi crash, like the DeFi explosion was followed by a DeFi crash, which was then followed by an unending bull market. You always have to get everybody out. Let me pull this chart up. I'm pulling this chart up. There's always a way that markets hurt people somehow right before it goes completely crazy. Maybe this doesn't do it justice, or maybe my memory is faulty. I just remember, like, yeah, here it is. Okay, so this is Uniswap back in the day, right? This is the airdrop in September of 2020. Where I can remember people being blown away. They're like, "Oh my God, I've been using Uniswap and they're gonna airdrop me a token. Uniswap's gonna have a token. It's a governance token. Okay, whatever." But everyone's like, "Oh my God, they airdropped it to everybody." And so, of course, what did everybody do? They sold it. Then you had the DeFi crash. This is in November. Then you had this like healing period, and then it was up only. Like, cough, cold, and flu was already in full swing. It just sat. It crashed. It sat here. Everybody got out. Everyone's like, it doesn't matter. It was like a full month. It was like, the company I worked for launched. We launched at the bottom, and then the DeFi crash happened. We almost went out. We almost lost it again. And my boss goes, "We got to get on the air for Black Friday. We're going to be on the air. It's going to be the first crypto Black Friday thing." Right now, TradingView does it all the time. We're like, we're getting on the air. We're doing Black Friday. We're ordering Santa masks. We're going to be on Christmas Day. We are doing this on Black Friday. I think Uniswap on Black Friday was at $3. It was a 3x by the end of January. It was at 9, and then it went to 20. And this is what's going on right now in DeFi, by the way. This is not Bill reminiscing. This is what's going on in DeFi right now. Right now. First was Hyperliquid and Canton. Then Aave popped. Now Syrup is moving. DEXC and Backpack, which people don't even know what that is. This is happening. Bitcoin DeFi is happening. Metaplanet wants to do this Bitcoin credit thing. But people are too busy clicking Michael Saylor disaster P to recognize what's happening. And we're too busy going, well, it's like, I do this YouTube thing for a living, right? It's like, well, it's the 63K trap. No, it's the 61K trap. No, I don't know if I should buy it now. Let's do a 5x levered range between 58 and 63. It's so exhausting. So exhausting, especially when the real themes are actually in play. And as we just learned from Uniswap, this is how the market gets you out. It's got a way. It's just like I hate, he's so old and so out of it, but he's so right. Markets transfer money from the impatient to the patient. The impatient wind up getting out. They get frustrated. They lose their mind. They can't stand it anymore. If you can't hold on financially, you can't hold on financially. There's no shame in that. You got to pay bills. You got to stop out, whatever. But if you're not getting forced out, don't get out. Not investment advice, right? If you're getting stopped out, you're getting stopped out. But if you're not getting stopped out, these shows exist. The YouTube member area exists. And Patreon is the same thing. The reports in Patreon, these things that we do where we talk about these altcoins and these sectors and these PowerPoints. The Michael Saylor scenario that I published didn't happen. It didn't fall apart. It should have gone to 40K off that, but it didn't. Why? Because of all this stuff that Toby is talking about. All this AI related stuff. I mean, we have more stuff than we can process right now about what's going to happen when these agents start coming into the market. More stuff than we can process because it's going to be that big, along with privacy and a lot of other things. So, if Bitcoin and ETH are still holding the 200-day moving average on Sunday night before they do the, whatever stunt they do for futures to open, if Bitcoin doesn't fall apart over the weekend, you may actually have some positive price action because they blew up a bunch of buildings in the Middle East. And unless they go to total war, oil doesn't want to go up right now, today. So I don't know why everyone is negative. I understand why you're depressed. I understand why you're discouraged, but you shouldn't be negative. You shouldn't have a negative attitude, says the guy who needs cryptotherapy on a regular basis. I get it. It's better. It's better than you think. And it's better than it looks. Even if it looks bad for another 2 months, it's still better than it looks. That's the market update for today. We will see you Monday.